Hi, everyone. I'm Shan Bai. I have worked in retail real estate strategy and market research function at a Fortune 500 national retailer for the past few years, and I'm also involved in Asian investment community. Oftentimes, when I talk to a Chinese investor, they always say that they buy multifamily or self-storages. So I realized that there's a gap of awareness and knowledge between the Asian investment community and the retail real estate. That's why I want to take this chance to ask you Chen to clear out all of those questions. Good morning, Hugh. How
Hey,
are you?
good morning. Thank you for setting this up. This is great. And I know we had met online through social media first, but then in person at ICSC Las Vegas, the conference for retail properties.
Absolutely. I was very excited to see you in person. And since I've always encouraged and inspired by our content, and I really learned a lot as the MC. So that's why I'm like, why don't we shoot a video together?
Right. And also, it's nice to have the Asian community inside of ICSC Las Vegas. There is a lot of people from Asian descent there. So I think that was a nice common bond.
Absolutely. Since we're both very passionate about retail real estate, and I really appreciate your time to help me to share the knowledge and your experiences. Actually, last weekend, I went to this Barnes Nobles in my neighborhood, and I overheard a conversation between the store manager asking an employee if he can add more shift due to the store sales is really good. I think it's very encouraging since you would imagine the bookstore is a business that gets impacted by e-commerce most, especially when the inflation is high and the consumer spending gets squeezed. But surprisingly, the business is not only surviving but also thriving in this environment. So I want to know more about shopping center as an asset class from the owner and operator's perspective and why it's important. So can you please give us a high-level introduction about retail real estate?
So,
And
so quick question. At the Barnes and Noble bookstore that you're at, what
mhm,
type of retail property was it? Was it a mall, a strip center, power center, lifestyle center?
sure, it's actually stand-alone neighborhood property. Is a used to be at Barnes Noble and then turned to a Rite Aid and then back to a Barnes Noble again.
Okay, that's good to know because I think that a lot of people, when they're thinking about retail, they think of shopping malls, like the enclosed malls. So I just want to make sure I point that out. But you wanted to ask me about a high level about retail, and that's exactly what I always like to start with. That retail is not just one type of property. You have standalone, which is single tenant type of properties. You have a smaller neighborhood strip center. Then you have a regional community shopping center. Then you have like a big power center, which power center means that they're the very big stores like Target, Best Buy, Michaels, maybe Outdoor World. They're all next to each other. And so there's fewer small spaces. And then you have the enclosed malls. That's what some people think about when they're thinking about dying retail. And they have their challenges, but there's some nuance there also. And then you have like a lifestyle experiential type of property where it's more entertainment. They have movie theaters and bowling alleys and things like that. Then you also have the street retail that you see in New York and or in Hong Kong on the street. That's its own thing. No parking, no common areas. It's just the bottom of a big multi-story building. So I think that it's important to distinguish those.
Absolutely. Like you mentioned that I'm actually from China and I realized the type of retail and also the place, the retail real estate is so different between Asia and here in the US. That's why it's really important to realize that there's so many different type of retail. Not only like mall, like you mentioned that. So that's why like when we talk about retail, it's not only the just like all the business will everybody is shopping online now. No, there's so many type of retail real estate.
I think that the online shopping is something that we should just talk about on the front end because I think a lot of people that don't know the retail sector extremely well, immediately that's what they're thinking. So let's talk about it. And I think that it's important to note that if you're watching this in Europe or China or the United States, e commerce is a little bit different. In the United States, when you look at the graph, the e-commerce was growing very rapidly in the early 2000s and even in the mid 2010s, and certainly had a big spike in 2020 during the shutdowns. But it's kind of plateaued, meaning that it hasn't seen the very high amount of growth in online sales over the last 2 years. I think maximum penetration for retail for e-commerce in the United States is probably going to be about 18% or so. And that's about what it is. But in China, I think it's closer to 30%. And Europe, I think it may be also closer to 20 to 30%. And I think that this follows the historic nuances of the way that the American consumer is. Because if you go back into history, before Amazon was around, there was a company called Sears and Roebuck. And they were the disruptor about 80 years ago because they did the mail catalogs. And then they offered the Sears card, the first time a retailer offered their own credit card. And the maximum penetration for the Sears Roebuck credit card is about the same as the amount of people that have the Amazon Prime account now, coincidentally. And the penetration for the mail order business at its peak is somewhat similar to the maximum penetration for e-commerce in the United States today.
Nice. That's why I feel like, because I'm a firm believer in brick and mortar retail, there are different uses for retail real estate. And as you mentioned that has been historical interruptions for retail. So there's always interruptions in the history. So that's why I think it's very important to know the usage for that particular retail. I think it's very helpful from a investment perspective to understand it as a whole, not just more about, hey, the retail will be impacted by the e-commerce.
Yes, I think that the use categories have changed over the last 20, 25 years. I got into the shopping center business in the year 2000. And at that time, stores like Toys R Us were around, and there was linens and things, and a number of other stores that are not around today. I saw that the tenant mix at that time shifted dramatically over the following 25 years. Today, there is a lot more restaurants and services, and there's a lot more medical and fitness centers, and there's a lot more other things that really are essential use and daily needs and things that you have to do in person or is better to do in person.
Absolutely. Actually, I have another question regarding the retail real estate. So with the low vacancy nationwide, so where do you see value add? And then how do you define a good deal as a operator and owner?
The low vacancy is a great thing. That shows that the demand is there. I think that whenever you're investing in any kind of asset, doesn't matter if it's retail or multifamily or self-storage, as you mentioned, if there's not enough demand, you shouldn't invest in there. But I think that the story that retail might not be a good place to invest because there's not a lot of demand is contradicted by the vacancy rate being low. If the vacancy rate is low, that certainly means that there's a number of retailers that want the spaces. And when I say retailers, I just want to make sure the audience knows that it also includes restaurants and your dental office and your daycare and your fitness center. And all of those other uses is not just clothing. So I just want to make sure that they understand that. But I think that the vacancy being low and the demand being high would mean that if you can buy a shopping center where the rents were negotiated 10 years ago or 15 years ago, then the value add is to bring those rents that were negotiated a long time ago much higher, assuming that your neighborhood that you're in, that market rate also went up. And that's correlated to population growth.
Absolutely. So as the owner and operator, and I know that Sagalo has just celebrated the 50 years anniversary. So as the owner and operator, so how would you define a good deal from an investment perspective?
I think that a good deal always starts with the basis. It always starts with not necessarily the cap rate, but the cap rate's very important because the cap rate is your unlevered return year one, but also what is your cost basis in a per square foot number? Because the higher the cost basis per square foot, the more rent you need to achieve for you to achieve the returns that you're looking for. And ultimately, when you're investing in these kinds of properties, you're looking for a certain amount of internal rate of return or yield over a period of time. So I think that's super important. But also, a good deal is really the community. When you're buying a shopping center, you're really buying into a neighborhood. You're buying into a community. If the community is not doing well, it doesn't matter the basis that you bought it at. You're not going to do well with your property. So even more important is that you're buying into a neighborhood that's growing, that has job creation, that the crime level is low, that there's intelligent people there that had education that can continue to increase their income, because all of those factors mean that the stores in your property can generate higher sales because the demand will be higher.
Absolutely. And it sounds like the investment fundamental is similar across the board for different asset types. For example, retail real estate, multifamily, and self-storage. So what do you think the pros and cons of retail compared to other asset classes?
I'll give you my opinion, but I'll warn you that I've only been involved in the retail asset class. But I have friends that also invest in apartment buildings, office, industrial, and self-storage. So I'll start with the easy one. If you're talking about self-storage and you're talking about even hotels, it's a completely different business. The reason why is because self-storage, your lease is 1 month. When you're renting a space in self-storage is 1 month. And additionally, the location of the self-storage, the exact location doesn't really matter. As long as it's close to the person, that's all that matters. It doesn't matter if it's on the certain street or a certain corner, and it doesn't matter if it's even on the main road. It doesn't matter. And the hotel is the same thing. Your contract is for 1 night. So it's an operating business more so than, let's say, office, industrial, apartments, and retail. Now you go to the apartments. The apartments, your contract is for 1 year, and you're dealing with normal people. Your guarantee of that lease is not a corporation. It's not a business. And so it's a completely different dynamic. Also, the contracts are non-negotiable. For instance, when you're going to sign a lease at an apartment building, it's not like you're sending it to your attorney to redline your apartment lease and sending it back. The landlord's going to say, get out of here. I'm going to rent it to somebody else. And so that dynamic is different, and which makes multifamily more commoditized as far as the tenants are concerned, and maybe even easier to understand. And because of that, you have so many more people in multifamily. So that amount of investor demand drives down the cap rate. So keep that in mind. With industrial, it's very similar to retail, actually. In that you're dealing with businesses and you're dealing with long-term leases and you're dealing with the place where that business makes money. The difference is that with industrial, your location doesn't really matter when you're talking about whether or not you're on the main road. With retail, you have a lot of acreage on main thoroughfares. And additionally, with retail, the buildings cover less of the land, so there's less density. So what I like about retail is that you have more flexibility down the road if you ever wanted to redevelop it into something else, because there's always demand for land on major thoroughfares. And for example, we redeveloped a shopping center and sold it to a mixed-use operator that built 400 apartments on that former Kmart. And then with office is in a tough space right now because a lot of businesses still are not fully back in the office. There is remote work and hybrid still. So that means is that the businesses, a lot of them have assessed their needs for office space and realized maybe they need a little less office. So because of that uncertainty in the capital markets, the lenders and the investors are a little bit more cautious, so the cap rates are much higher and it's hard to finance.
Exactly. That's why actually there's a lot of those conversion from office buildings to multifamily buildings. There are definitely a lot of conversions happening right now. Thank you. You actually, I heard a joke from my other investment friends saying that who has been in multifamily, but then they're like, I never want to buy any property with a bed in it because of the high turnover of the tenant, and then also the heavily operation involved in running a multifamily. So that's why I feel like retail can be a very dynamic asset class. It definitely also involves all of operation, but I think it's definitely different than those multifamily, like you mentioned earlier. That the tenant can be corporate credit and all of those other factors. So, and I also heard that there's a question from my investment community that typically the deal size for shopping centers can be very big, and it's very hard for individual investor to underwrite or analyze a deal or a shopping center. So what's your suggestion on that one?
I think that I have friends in multifamily, and those deals are bigger than my deals. So if you're buying a 300 unit apartment building, you might be spending, hundreds of millions of dollars. And my deals that we buy are between 15 and 30 million dollars. But I think that what you're saying is also true in that if you're looking in a neighborhood and you can buy a quadruplex for $1 million, or if you can buy a 10 unit for $2 million, then that's a fairly low entry point when you're comparing to a strip center that might be $5 to $10 million. That being said, in certain markets in Florida, not in the prime markets, in tertiary markets or secondary markets like Jacksonville or in Lakeland, you can buy 10,000 square foot strip centers for about $2 million. I've seen it. And you can buy maybe 2 tenant shopping centers for $1.5 million. So there's also is a place, or there's a area that you can look in, a type of retail that you can look in to get in a little bit lower in your entry level purchase price. Additionally, like all commercial real estate, a lot of commercial real estate gets syndicated. And what that means is that there is a operator and a landlord that they buy a real estate like shopping center for $30 million, for example. They put a $20 million loan and they have $10 million of equity that they have to come up with to close on the loan. A lot of the syndicators, they might aggregate the equity from investors that want to invest $100,000 or $500,000 or $1 million. And you can get a group of 20 or 30 investors to buy this $30 million shopping center that way. So that's another path to do it. And that doesn't only apply to shopping centers, that also applies to apartment buildings and other assets.
Absolutely. And oftentimes that I hear that individual investors also mention that it will be very hard to manage a shopping center. But as an owner and operator yourself, so I want to know, what's the biggest challenge do you see to run a shopping center? And I know that you've been in the business for 25 years with a rich background in leasing. So what do you think are the qualities that make a good shopping center operator?
I would actually argue that it's harder to run an apartment building for a few reasons. One is that when it is a place where people live, you're held to a much higher standard. There's much more regulation there. A lot of these big apartment buildings, they actually have on-site management. So you have to staff it there, and you have on-site maintenance, on-site facilities. And so there's a lot more logistics that happen there. But there's also differences. In a shopping center, that is the asset class that probably gets the most foot traffic in the common areas out of all the asset classes. If you think about it, going to Walmart, for example, there might be 1 million, 2 million people that go to Walmart over the course of a year, a busy Walmart. You never have 1 million people go into an apartment building. That's just not what you do. And also with the common areas, you have less control of it. A lot of apartment buildings, a lot of the common areas are inside of the walls. And so you have to have a lot more diligence when it comes to inspecting the parking lot and any type of risk hazards and any type of things that might be life safety. You have to make sure that the lighting is always adequate and the safety is there. So I think that it's a different type of focus when you're comparing, let's say, apartments to shopping centers as far as the difficulty. But I would say that we typically do not have on-site property management. We don't have on-site maintenance, and we don't have on-site cleaning crew. These are all vendors that we hire. The most important part of a shopping center management is to hire the right management company, because then they have the access to vendors that do great work.
Absolutely, absolutely. So, I know you've been in the retail real estate for 25 years. So, what do you think are the good qualities that make a good operator?
I think track record is what everybody looks for, whether you're a bank or an investor or even a tenant. If you're a tenant, you're looking to see what's the track record and the reputation and the history for the operator. That's basically the biggest thing, because you want to see that someone knows what they're doing in keeping a property safe and clean and well operating. Because if you're able to do that, then you're able to attract the tenants. If you can attract the tenants, then that's the income. That means the value of the property went up, and that you can perform for your investors and you can pay your lenders. So it boils down to that. Someone that really understands assets, asset management, value creation.
Absolutely. Since you're a mentor in this business for over 25 years, you must have been through several cycles of this industry. So, from an investor's perspective, I think when selecting a good operator to invest with, I think the discipline is also very important. What do you think about the discipline in this market condition?
I think discipline's important, but also I think that the checks and balance with discipline is to make sure that the operator has a lot of skin in the game. And what that means is that in the example I gave earlier, to buy a $30 million shopping center, $20 million loan, $10 million equity. For example, for us, the way that we do it, if I need $10 million to close of equity to close on a property, I'm putting in 2 to 2.5 million of our own money, which means that if something goes wrong, we're really suffering. So there's a high alignment to make sure that we do all the right things, because we also have a lot at risk. And that's really important, to make sure that the operator is investing enough into the project so that you avoid undisciplined decisions, because they're also at risk.
Absolutely. The skin in the game is a guarantee, is a safety for the investors to look out to.
That's right.
Yeah. Since, as I mentioned when we were in Vegas for the ICSC, I said I am a firm believer in brick and mortar retail, and I still do, as I mentioned earlier for this Barnes Noble's example. So I want to know, from an owner and operator's perspective, where do you see the future of retail?
I think when you're talking about retail shopping centers, everything I said before is the same truth, in that it's on major thoroughfares. It's in the path of growth. That there's nowadays, there's a lot of essential uses and daily needs and necessity type of retail. And I think that the supermarkets you're always going to need, and the gym, fitness studio, and the doctor, the optometrist, the dentist, the hearing, beauty, you're going to need a beauty salon, nail salon, day spa, daycare for the kids, the tutoring. All of that is best done in person. Why is there tutoring studios? You could do tutoring online, but you know that that's not as good as tutoring in person. So that's why there's tutoring. You can do school online, but we saw in COVID what happened. It's not as good as in person. So you do school in person. I think people came to realize that in person is very powerful. And also Gen Z and Gen Alpha actually is going back to the mall, the enclosed mall that I talked about earlier that people think are dying. A lot of them, Gen Z and Gen Alpha, that only grew up with e-commerce. They only know e-commerce. they said, hey, I think in person might be better because they always grew up in e-commerce and they like to try on the clothes and touch the material before they buy it. How many times do you buy something and you have to return it? It's not good for the environment, it's not good for the seller, and it's not good for the buyer. And so I think that the future of retail, I think, is going to be a little bit similar to the past. And even more so because in the United States, at least, we have a lot of shopping centers with huge parking lots. And I think with AI and with self-driving, you're going to find that the need for parking lots of that size is going to be reduced. And so if you can reduce parking lot and add more buildings there, then the retail or not even the retail, but the community and your town and your city starts to look more like Europe, old Europe, where it's more walkable, bicycle, maybe the scooters. And so it's more friendly to pedestrians. And I think that that's the future of retail.
Interesting. You actually tackle another question. The next question I'm curious about, like which is the AI's impact on the consumer behavior and the CRE operation. You mentioned that you see the parking lot might be shrinking, the size of the parking lot might be shrinking, which is very interesting. Do you see is an impact from AI or just the generation change?
Well, AI is what's allowing self-driving. If you didn't have AI, you couldn't do self-driving. And I think that autonomous vehicles is a huge, huge difference maker. But when you're talking also about AI, when it comes to operations, there's a lot of things that it can impact that the customer never sees. For example, we use video cameras at all of our property. Pretty soon the AI is going to be able to see, is your sidewalk dirty or is it clean? If it's dirty, then they're going to send someone to clean it right away. Are the lights working or not working? If it's not working, then very quickly they can change the lights. And it helps a lot operationally to make sure things are looking good all of the time. And I think that that can also help to reduce the cost a little bit too. Because if you address a problem very quickly, then that can avoid bigger problems later on. And so if it's working more efficiently, that can actually reduce the cost to the retailer tenants. Then the retailer tenants themselves are also using technology AI to help with their efficiency. And the idea is to ultimately have the best value for the customer.
Absolutely. And you mentioned those self-driving cars. Actually, every single time I went back to China, I do see those self-driving food delivery vehicles, like a robot. Actually, I do see them in Center City, Philadelphia now, where I live. Those Uber Eats robot, that the self-driving car, the little robot that they actually start to use them to deliver food, which might be the trend for retail in the future too. But like you mentioned that for the necessity of retail real estate, I think in-person experience is crucial because I really think that with humans, we have the curiosity and we have this crave for in-person interaction and experiences. For example, that Barnes Noble example, when I asked the store manager, what do you think are the drivers that draw people back to the bookstore? He said people want to read the book before they buy it. And just like clothing, we want to touch it, feel it, try it before we buy it, before we purchase it. And then he also mentioned that parents will bring their kids to the bookstore, and then the retirees will come to the bookstore to pick a book or two for the summer reading. So people crave those in-person interactions. And also the Christmas cards in Barnes Noble, they're designed different than from CVS. So that's why those are the drivers that draw people back to the physical bookstore. And also, I think the cafe is a very good, is a necessity space for people to hang out. For example, I really like to go to a cafe to hang out with my friends, and I really like to bring a book to read in the cafe. So those are all retail real estate that are necessity for people's lives. That's why I'm still a firm believer in brick and mortar retail. So here, I guess my next question is that since you've been in retail real estate for over 25 years, why do you love it? What keeps you work in this industry? What's your high calling?
I think that the The purpose of retail has remained the same over the last 1,000 years or more. And it's that when you're talking about the exchange of goods for money, that's
Mm-hmm.
the town square. That's where the community gathers, right? And goods can be a shirt, but it also can be a piano lesson. Those are goods. And I think that having a very good retail property in a neighborhood enhances the neighborhood. In the state of Florida, we have a supermarket called Publix. They're
Mm-hmm.
an amazing supermarket. When Publix moves to a neighborhood, the demand for the houses in that neighborhood go up because the retail enhances. And I think that having the ability to shape a community, to improve a community by improving its town center and the heart of the community is a very worthwhile endeavor.
Absolutely. Have you met any mentor along the way that strengthens your belief in the industry or impact your effort in this industry?
I meet a lot of mentors. The longer I've been in the business, it
Mm-hmm.
almost feels that I realize that I don't know. I It's more evident that I don't know everything. Maybe when I was younger, I thought, okay, maybe I know everything. But the older you get, the more you realize there's a lot I don't know. And early on, there was a very prominent woman in the business, Beth Azor. She hired me into the business, and she was my mentor for quite some time, and she still is today. And along the way, I have met other mentors as well. And I'm also a part of an organization called YPO, Young Presidents Organization, which is a global organization. I believe I met YPO members even in China and Taiwan and Korea, Japan. They're all over the globe, including Asia. And the people that are a part of that organization have accomplished amazing things, things that I couldn't even imagine. And being around those types of entrepreneurs and seeing that they're not too different from me, but they've accomplished so much more gives me inspiration and the belief that if they can do it, I can do it also.
Absolutely. It's very encouraging and inspiring. And that definitely, well, I'm still a newbie in this industry, but I definitely met a lot of tremendous people as well during my career, such as Gail. She was the department head at the previous company that I worked at. And then she always taught me, I, I want to be persistent, consistent, resilient, and keep evolving in this industry, keep learning, and then giving back. And then I still remember that one time I was asking her, "Oh, what value do I give you back for mentoring me?" She said she want me to enjoy my work, and then she want me to live my life to the fullest, and then help as many people as I can along the way. That's really circle back to why I love this industry. That we're really creating the space to impact people's lives. We're creating space for people to gather with their friends and families, and they're shopping. They're having a good time with their family, and then they're really. I think what we do really impact people's daily life. That's why I really love this industry.
I agree.
Uh, Thank you so much, Gil. I think I have no other questions. I really appreciate you share all of those experiences with me and knowledge with me, and I think it's very helpful to help me to bring them back to my investment community to bridge this gap.
Well, thank you for having me and setting this up. I think that if there's anyone that is considering investing in commercial real estate and was unsure about investing in retail properties, and maybe there's topics that we didn't cover in this video, certainly I encourage them to reach out to you and let you know what those concerns about, because we can always answer those in another video. I just want to make sure that everybody understands really the true story about retail shopping centers.
Absolutely. And I know that you're huge on social media, like how I found you. So how can we find you on social media? Do you mind share with us your contact information?
I'm most active on YouTube,
Mm-hmm.
Hugh Chen CRE. I'm also on TikTok now, Hugh Chen Retail CRE, and I'm on LinkedIn, Hugh Chen Retail CRE. And I know when I was with you, I downloaded WeChat. But I'm not as active on WeChat, but I have it on my phone.
And we also use Little Red Note. So if you don't mind, I will definitely share this content on the Little Red Note. And I really appreciate your time. Thank you so much.
Thank you.